Morning, members. It's about time to make a start. Let's get started. Welcome to the panel on financial affairs meeting. Item number 1, information paper issued since the last meeting. Since our regular meeting on the 14th of March, we have received one information paper. All the details are set out in the agenda for members' information. Item 2, the meeting arrangement in the remaining term for the regular meetings between July and October. Having referenced the timetable for the remainder of the term, and also having regard to our usual practice of having meetings scheduled for the first Monday of each month at 9:30, we now propose that the meeting schedules for July to October are as follows: July 7th, September 1st, and October 6th. The timetable has been tabled before members. Do members find this agreeable? Are all agreed? Item number 3, discussion items for the next meeting. The next meeting is scheduled for the 6th of May, 2025, Monday at 2:30 p.m. The administration proposes 2 items for that meeting. 1, briefing on the work of the Hong Kong Monetary Authority, HKMA. 2, updates on Financial Services Development Council. Do members find these items agreeable? Any comments? No? All right, then moving on to item 4, enhance the competitiveness of the securities market. The administration is here with us. We have with us for this item Mr. Joseph Chen, Undersecretary, Mr. Stephen Lee, Principal Assistant Secretary, Mr. Michael Juglin from the SFC, Ms. Bonnie Chen, as CEO HCAX, Ms. Catherine Ng, HCAX, and also Mr. Brian Roberts, also from HCAX. Mr. Chen, Undersecretary, please. Chairman, members, good morning. Together with the Hong Kong Exchanges and SFC, I'm here to attend today's FA panel meeting. The item is to enhance the competitiveness of the securities market, and also a whole raft of enhancement measures, including the increasing the position limits of derivatives on major indices, and also electronic public offering subscription process. We have to consolidate and enhance the strengths of Hong Kong's international financial center. We need to have institutional innovation, product innovation, a critical mass of enterprises and financial connectivity. Over the past few years, we have been making changes, and we have had the task force on enhancing stock market liquidity, and we're seeking capital from outside. The market is getting more active. Hong Kong ranks among the top 4 IPO markets. There are 71 new listings last year, with total funds raised amounting to 87 billion, close to 90% year-on-year increase. Trading volume hit new highs, with total the daily turnover increasing by 26%, or $30 million. The market is getting more active. We have 71 new listings, totaling $87 billion. The daily turnover has increased to $24 million, increasing 80% on last year. Over the past year, we have been implementing measures to enhance the competitiveness of the market, covering the listing regime, market structure, trading mechanism, corporate governance, we have also implemented the narrowing of the trading spread. We are promoting sustainable development and promoting mutual access and attracting mainland and overseas capital, and we are exploring new capital sources. And there are two measures, two legislative measures that we have. And the first one is to meet the needs of the investors. We are proposing to amend the legislation regarding the increasing of the position limits of indices derivatives in relation to the three indices: Hang Seng Index, Hang Seng China Enterprises Index, and Hang Seng Tech Index. We're increasing the position limits there. We propose this increase while maintaining financial stability. All the details are set out in paragraph 23 to 27. The second proposal is to have electronic public offering subscription process. At the moment, under the ordinance, class exemption notice, there is the practice of MMO. There is the printed application form can be issued without the printed prospectuses. In August, we conducted a consultation regarding this proposal. With the support of the market, the SFC proposes that the MMO be lifted and take forward the electronic public offering and subscription process. All the details set out from paragraph 28. These two legislative proposals will be tabled to the Council for negative vetting. Other than these measures, this year we will be going full steam ahead to promote high-quality development. We are coming up with new measures to create new growth areas to tie in with the latest economic situation. And we will be conducting a holistic listing review to look at the post-listing obligation, the listing rules, so that more issuers and also China concept stocks will be raising finance in Hong Kong, in particular the patient capital and also long-term investors to increase their allotment in Hong Kong stock. We will also taking forward the dedicated pathway for tech stocks. For ASEAN and Middle East, we will be stepping up our promotion and marketing and explore the development of ETF market to promote a two-way capital flow. And there will also be enhancement measures in terms of the products to allow more flexibility. We will continue to reform the trading mechanism. We will introduce new functions. By the end of the year, we hope that we will have the T+1 settlement mechanism. We will also engage the market for discussion. The Hong Kong exchanges and SFC will also put forward proposals regarding the trading units. And we are also looking into the technical preparation for the dual counter trading. We're also having the single tranche multi-counter arrangement. We will be using the same international identification number, and we will also have the stamp duty in renminbi. Going forward, the Hong Kong exchanges and SFC will be keeping in tune with the market needs and conduct further studies, and the HK exchanges and the SFC will make appropriate arrangement as necessary. We are here to listen to members' views, and we're all very delighted to answer members' questions. Thanks very much, Secretary. It's now time for questions. 4 minutes for each member. Mr. Rock Chen, Dr. Wendy Hong, Dr. Tan Yue Heng, Mr. Edmund Wong, Mr. Sunny Tan, Mr. Johnny Ng, Mr. Chen Chen Ying, Ms. Carmen Khan, Mr. Jeffrey Lam, and Mr. Chen Kin Po. Mr. Rock Chen. Chairman, thank you. I've got 3 questions. The first one is, it was said a moment ago that the position limit for the derivatives will be increased. I welcome this proposal. It was a long time ago that this was looked at, and the market cap of the Hang Seng Index has increased substantially. Would there be any mechanism to conduct a review on a regular basis, maybe every 3 years, every 5 years? Would there be a regular mechanism, on a regular basis? And also the dedicated technology enterprises channel, I welcome this. How will you tie in with A18C? How will you merge this with that particular provisions to make the listing more smooth? And also the listing arrangement we have received from the trade, including the investment banks, the listing applicants, the enterprises. They like to find out more about this dual filing arrangement. How is it different from the dual regulatory approval? Now, there's dual vetting. I mean, it seems that there's more in the way of dual vetting than dual filing. So in taking forward the listing arrangement, I hope that there would be some more explanation there. And when an enterprise seeks listing, how will the division of labor be arranged? And what is the post-listing monitoring and supervision? How is the work divided up among the authorities? Right, first about the position limits, we will be addressing this, and also the 2 regulators. I will be telling members the respective work later on. SFC first, please. Thank you, Mr. Chen, for the question about the increase in the position limits. We keep reviewing this on a regular basis. You're right that we haven't reformed this for a long time. And after review, we didn't see the need for making any changes. Now, your question is a legitimate one. Depending on the market situation and also the utilization of the positions, we will keep this under review on a regular basis. Thank you. Yes, Hong Kong Exchange. Thank you. Thanks very much, Mr. Chen, for the question. I take the second and third question. The second question is about the dedicated technology enterprises channel. Now, technology is going ahead by leaps and bounds, so the nation is really supportive of innovation. Can you speak into the mic, please? Beg your pardon. So over the years, in terms of listing rules, we have had a number of different chapters. 18A in 2018, there's biotech, and 2 years ago, 18C, that's for the specialist technology. Now we're talking about innovation and technology. Some years ago, when we designed these provisions, we probably didn't take care of the needs of the frontier technology. So against this background, we are proposing this dedicated channel. The idea is to take into account the issues that the trade is airing to us, and we are having this customized channel to serve them. This is not restricted to 18A or 18C, but in answer to members' questions, 18A and 18C remain our focus. So we'd like to go hand in hand with them, and while they are contemplating a listing in Hong Kong, we will be addressing their questions ahead of time. As soon as we have made arrangement with the SFC, we will make the announcement accordingly.
The third question is on dual filing division of labor. Perhaps you would have noticed that last year, September, the Stock Exchange and the SFC had a joint announcement. In the announcement, we talked about the optimizing of the vetting system for the SFC and the exchange. You would have heard from the SFC that this is a front-load vetting arrangement. Perhaps the SFC, Mike Dinan, will be talking about that later. Now, because of time, everyone, we will listen to the supplement, if any, afterwards. We have a long queue. Next, Wendy Hong. Thank you, Chair. 3 questions. After 12 years of efforts, Hong Kong and the mainland capital markets now have a bond equity, assets, and a connected system between the two. Now, connectedness will still need some work, including mechanism and targets. For targets, there are REITs Connect and ETF Connect and Bond Connect, etc. And mechanism, there is the RMB, OTC, and also southbound, the threshold, and also other arrangements. Perhaps the administration can talk about the connectedness in the future, roadmap, timetable, etc. In 2018, second question, Chapter 18A for non-profit making biotech companies to come to Hong Kong for listing, and we have become a hub for that. I've looked at the 60 or so companies listed on 18A. I see that for many of them, their trading price is lower than the IPO price, except for 10% of them. And this affects the medium to long-term investors, their confidence in Hong Kong. So for Chapter 18A companies and non-profit making biotech companies, have you made a comparison about their performance? What are some of the improvements we have to make? A third question, and that is the IFC of Hong Kong. How can we make the provide more diversified international services? How can we extend our international outlook? At the same time, we should also provide a local dimension. It says that there will be a listing regime amendment in the future. Again, for chapters 18A and 18C, can we have a local dimension whereby the production lines, R&D centers, etc., bring in local companies, provide incentives such as concession for listing fees, value-added services, lower the threshold for listing, etc., so that the listing regime can cater to the local industries in tech and innovation. Well, thank you for the questions. I will answer the first questions. The Stock Exchange will answer the second and third questions. Connectedness is a very important mechanism for Hong Kong, and Hong Kong is an international financial service center serving the country. So this deepens our role in that. So the financial markets connectedness is very important, and we're talking to the relevant national departments on equity or stock connect, and through a gradual approach, we will be increasing the scope and the mechanisms as well. With the support of the central government, we have been able to have breakthroughs in the differential voting rights regime and ETF, and also overseas companies inclusion, etc. So we will be talking to the relevant departments on tax concessions or taxation and extension of stocks and other products included under connectedness. The second question is on 18A for biotech companies without profits yet and their performance. Well, there is no direct comparison as such. We see other stock exchanges, they may not have a specific chapter for listing of biotech companies without profit yet. Now, for a lot of the 18A companies I see recently, they have been performing well. As for whether there is room for improvement, we notice that not only for Chapter 18A companies, but in the IPO price discovery, for example, we can optimize on that. And that is why at the end of last year, we had a consultation paper, and the period for consultation has just ended. What we want to achieve is to have a comprehensive review for our IPO pricing. There had been a number of years without review. Now, the responses had been very proactive, and together with the listing division colleagues, we are reviewing the responses. And when we have a conclusion, we'll be announcing to the market about the future direction. Second question. Your third question, we are indeed talking to the SFC concerning our listing rules review, and we are open-minded about it. As for the specifics, where there are recommendations where we can have a local angle to optimize our listing rules to cater to them, we are very open to listen to the market with their suggestions and recommendations for consideration. Now, I remind members, if you have 3 or more questions, please allow more time for the administration and the for answer. Thank you, Chair. In increasing the competitiveness of our financial markets, I commend the work of the regulators and the SFC and the stock exchange, and also for the I have 3 questions here. The first question relates to the market. It's very volatile, especially with the tariff announcements from the U.S., so there are huge jitters in the market. What is a view on that, please? Now, last night, the People's Daily says that the central bank is lowering the 3 Rs, and there is sufficient reserves to provide full confidence in the securities market, and we will not be impacted much by the overseas market's performance. So in maintaining the stability of the market, what are the views here, please? A second question. This year, there will be a white paper on the financial and securities market in Hong Kong, and there will be a number of reforms mentioned there. What is the progress, please? And what are some of the key issues, and what are some of the measures in that? Third question, we will be hosting the summit for financial industry, and that will be 2 months away. It's only 2 months away, so what are some of the enterprises which have already indicated interest to join? What is the preparatory work on that? Well, thank you for the questions. Chair, concerning the volatility of the market, financial market changes all the time. In order to maintain our financial security, the government and the regulators have been working very closely for our currencies, futures, derivatives, equities, etc. We have been cross-market and all-round monitoring. The SFC is responsible for the activities in the market without any manipulation, and the stock exchange is also monitoring the market for orderly operation. And as the member had mentioned, Hong Kong as a leading financial center around the world, our financial market would of course be impacted by volatilities in the global market. And Hong Kong, our fundamentals are very strong, liquidity is high, and therefore we have been fair and open in our operation, and our core and fundamentals are very strong. And the government will continue to be vigilant together with the regulators to monitor closely the market to maintain a stable financial market. As for the second question from the member about our study of the market through the regulators and through the Hong Kong MA, we have and the Financial Markets Development Council, we have been listening to market voices. We have analyzed and consolidated the views, and we will continue to do this work. As for the third question, we have the summit conference coming, and it will be held within the year, and our preparatory work is ongoing. Thank you. Edmund Wong, please. Thank you, Chair. First of all, I would want to thank the government, the SFC, and the Stock Exchange in working on the competitiveness of the market. There are, of course, jitters in the market, which is uncontrollable, but at the same time, the regulators have put in the efforts. Now, for the financial market in Hong Kong, the paper had already mentioned that there will be a single equity multiple counters mechanism, and also RMB OTC development, and also stamp duty. And there will be legislative efforts soon. But the double counter trading is still 24 right now. I would like to know why it is still so limited. We want RMB to be internationalized. We want more RMB denominated equities. The market, if there is a need, we will respond to it. This is an egg and chicken question. With that, the RMB denominated stocks put into the Stock Connect mechanism, I do not know whether there will be more incentives for listed companies to join the double counter system. And also we see a trend of privatization of listed companies. Have you reviewed the stock exchange, this particular trend, and also the OTC market? Have you noticed any mega trends in terms of privatization? Yes, I'll answer the first question first. First of all, on RMB OTC, as a new trading measure and a facility, we have for the trading of RMB OTC market in the initial stage, it would not be a very high turnover. And for OTC, RMB issuance and market making and trading, we will accumulate more experience so as to facilitate more participation in the future, for there to be RMB, more RMB trading in Hong Kong. And indeed, for RMB OTC mechanism, we are pushing ahead. As for the other questions, the SFC or the stock exchange can answer those questions. First of all, just to respond to the RMB internationalization question. At present, for RMB OTC, there are only 24 equities, not that many, because we do not see a lot of trading in the market. So whether there will be more RMB OTC trading from the listed companies, that remains to be seen. And we are talking to the mainland regulators to include the RMB OTC into the Connect scheme, and we will soon come to the market with an announcement, and with that there will be perhaps more incentives for listed companies to issue RMB over the counter. the stock exchange. Concerning privatization, in 2023-24, for companies privatizing, they were 14 and 16 in number, respectively. In the past 5 years, on average, every year it would be 21. So privatization of listed companies, it is less than 1% of the total, and we have monitoring over the years. We do not see any rise in the trend. Compared to other markets around the world, our privatization number is far lower than that of those of others. For 2024, Hong Kong Stock Exchange, among the global leading exchanges, we are the only exchange with a net increase of listed companies. For the New York, London, and Singapore, they are in a negative number. So privatization is not a major negative for the Hong Kong Stock Exchange. Now, Mr. Wong talked about the OTC market and how it relates to these privatized companies. For the privatized companies, during privatization, they will provide an offer to all the minority shareholders, small shareholders. So whether we need to consider another mechanism whereby they're included in the over-the-counter, well, I think in the future consultation we might consider that.
Sunny Tan. Chairman, thank you. When the market has tumbled by 8 to 9%, overall 10% compared with last week, much smaller than the other our counterparts. It speaks to our unique situation here. I think the government, the SFC, and the Hong Kong exchanges should be working hard to leverage our strength, our unique situation. I appreciate all the improvement that has been made over the years, but certainly things can be better. In the near term, in fact, I've been talking with some of the investment bank, the IPO division, and I've chatted with them, and I was told that we have seen a lot of improvement in terms of the listing timetable. But sometimes we're stuck with the CSRC. There are 100 or so companies. I think if there is anything that the Hong Kong government can do to liaise with the mainland to unleash these potential companies for them to be listed, I think the listing division should do more. In the midterm, riding on Mr. Chen's question about the dual filing, dual vetting, perhaps some more response that can be forthcoming. And in the long term, the GEM board, the way forward, how do we enhance that? We need to have global competitiveness. I think we should really compete. We should be able to compete with other countries. Like we should have disclosure-based listing. The SFC keeps saying that we don't have the class action lawsuit. We cannot do that. I don't think I can subscribe to this idea. If you have the idea, you must be able to find the solution. Class action is only one of the means. In Hong Kong, consumers, if they encounter any problems, they go to the Consumer Council, and I think there can be some other ways to supplement this. Now, this is a rather broad issue. I may not be able to get the answer today, but if we are determined enough, given the chaotic situation in the world, I think we should really to enhance our competitive edge globally. 3 questions there. Chairman, on the first question, I set the background and I defer to the exchanges and the SFC. CSRC in 2023 published or promulgated the new rules regarding the overseas or the filing of overseas enterprises listing. Since this has been implemented, the government and the other bodies have been monitoring the experience. We did have reflected the sentiments of the trade to the CSRC regarding the progress of the filing with the CSRC. We will continue to liaise with the authorities in the mainland. If there are any difficulties encountered, the Hong Kong exchanges will render assistance. As for the rest of the question, I defer to the exchanges and the SFC. Right, the SFC.
Whether or not we can engage with the CSRC, we regularly have meetings with CSRC, and they are well aware of the fact that the process of approval is taking some time, and they are engaging with other sector regulators within PRC to discuss how they can make the whole process faster than it currently is. It's taken quite some time to get through that process.
Any supplement? The dual tradition, the German board, any further supplement?
In terms of, okay, I'm going to do that. In terms of front-loaded, the dual filing, and essentially as we've made clear in the past, we are looking at two different aspects. So the exchange will look at compliance with the listing rules, we look at compliance with the SFO. Generally speaking, that means we go through a relatively limited number of rounds on each prospectus. As we make clear in the joint statement, generally speaking, we will do about 2 rounds, and by that stage we'll have decided whether or not we think that there are concerns under the SMLR. At that point, the exchange essentially stops, and we then do that process from that point on. So we relatively quickly decide that we are no longer going to comment on prospectuses.
Okay, 我諗時間關係。
Right, in the interest of time, well, let's move on to the next speaker, Dr. John Ng. Chairman, thank you. Right. The ETF, now, there are 2 ETFs that are listed in Saudi Arabia, and I think we need to deepen the international or global cooperation. I'd like to put this to the administration. Are there any further plans up the sleeve to list more ETFs in other overseas exchanges? What is the performance of these ETFs? If they fall short of expectation, what is going to be done to improve the situation? Second, the German board. In 2003, the German board was created. The index was 1,000 points, and now it is 16 or something. I mean, 90-odd percentage point. A drop has been witnessed. Now, how are you going to improve the situation? Or are you going to conduct radical reform on this to allow more up-and-coming enterprises some more opportunity to be listed? Secretary, indeed, the ETF is, over the years, something that we have been promoting over the years. So as you can see, we have introduced the exemption of stamp duty, and the business has been on the rise. Like the member said, we have cooperated with other jurisdictions, like Saudi Arabia. We will continue to cooperate with local bodies and also overseas bodies. I defer to the exchanges regarding the latest situation, and the German board, I defer to the Hong Kong exchanges. Yes, please. ETF, I defer to my colleague, Mr. Roberts.
Thank you. Just on the topic of ETFs, I mean, the ETF development has been quite extraordinary the last several years. We're at all-time highs right now in both assets under management and average daily turnover. On top of that, we've had the successful listings of a Saudi Arabia ETF listed on HKX a couple of years back, which is the largest Saudi Arabia equity ETF in the world. And then as well last year in late October, October, we listed 2 ETFs on the Saudi exchange as well, which are also their largest regional ETFs in the market. So we've seen really good success in terms of the uptake in local demand for these products there that now are bringing China, Hong Kong equities to the Middle East market. We continue to still see good activity there. We're seeing these ETFs being in the top 2 and 3 most traded ETFs on the local exchange there. Beyond just the collaboration we have with Saudi Arabia, we've also have a lot of collaboration with ASEAN countries as well. We have depository receipts on a number of ETFs listed in Thailand, and we're exploring these mechanisms with other countries as well. And then going back to the Middle East, we're also having very active discussions with a couple of other markets there and doing something similar to what we've done with Saudi Arabia. So again, this is part of really at the core of what we're trying to do and trying to bring more of our products into their market, and then also trying to provide more of the Middle Eastern and ASEAN equity exposures here to Hong Kong to provide access to our investors here across the region as well. So we'll continue to work on that in the years to come.
John Board, any further supplement? Yes, let me take the question. In 2024, January 1st off, we have implemented a number of John Board reform measures. We hope that the SMEs will be provided with some financing platform. As a result of the reform, there are 3 companies that have taken forward the IPOs. It is an important measure. We have streamlined the process of switch. And as a result of the streamlined switching arrangement, there is 1 company that has managed to switch over. And we need to continue to review the John Board. Together with the SFC, we will conduct a review to enhance and optimize the John Board to allow more SME companies to get listed in Hong Kong. Mr. Ronald Chen, Chairman. I'm happy to see so many measures to enhance the competitiveness of the securities market, like the IPOs. We talked about the dual filing system, the dedicated technology enterprise channel, and also the listing. IPOs not only attracts new companies. I think we should also look to explore the dual or secondary listing of overseas enterprises. Now, there are some exchanges overseas that have been included in the list of recognized exchanges. There are 20, and this will facilitate the companies listed out elsewhere to come and get listed in Hong Kong. At the moment, for the Hong Kong exchange, how many applications for secondary listing are there, and are you going to be lowering the threshold and streamlining the procedures to boost the number of these categories? My second question is to lure more people into the securities market. The prices, whether they are attractive, will make a difference. Under the law, the government allows the listed companies to repurchase the shares. That this is supporting the prices. Will the exchanges tell us how many companies are engaging in repurchasing? And are they active? Are the volumes really high? And so much so that the investors would be more willing to buy into these shares. Also, we have introduced the treasury shares ordinance. More companies can have the treasury shares, and they would be given more liberty to engage in a repurchase. Now, for new shares, there is no need to pay the stamp duty, but there is a need to pay stamp duty for treasury shares to foster the development there. I'm wondering whether the administration would consider doing something or some concession for the treasury shares. Thank you. 3 questions there. Undersecretary. Thank you. Thanks very much. On this question, we don't have any plan for the time being. We will be alive to members' views. For the first 2 questions, I defer to my colleague. Hong Kong exchanges. On the first question, promotion overseas. Indeed, we need to would like to attract more mainland companies to Hong Kong. We also would like to attract more overseas companies or enterprises to get listed in Hong Kong. To this end, our team has been going to the Middle East, the ASEAN and other markets to do our marketing and promotion work. Like Mr. Chen said a moment ago, we have incorporated different exchanges overseas and become the recognized exchanges to facilitate the secondary listing. Indeed, we found a phenomenon that other than secondary listing, many enterprises that we encounter are really keen to have the primary listing in Hong Kong. The main reason is that if they want to be incorporated into the Stock Connect, they need to have the status of primary listing before they would be able to do so. So we are adopting a two-pronged approach. Now, whether the enterprises would like to have primary listing or secondary listing, we will be doing the promotion in any case. We are glad that recently there is a company from Southeast Asia that has gone through this back route to get listed in Hong Kong. We are taking this forward. As to the repurchase of the stocks and the treasury shares, I defer to my colleague.
For treasury shares, we introduced this last year, and there was the 11th of June 2024 commencement. Since June of last year commencement to February of this year, there are 268 issuers which have been repurchasing shares. 91 of them have been using the mechanism that we provide for treasury shares. As of end of March, there are 2 issuers which have sold or transferred these treasury shares, and they are OTC for share or stock incentive systems purpose. Carmen Can. There are a lot of questions which have been asked by other members. I'll ask 3 questions. In December of last year, there was the IPO consultation organized by the stock exchange, including the lockup period. And I see that the opinions have been very differential. For the phased unlocking of shares, there are certain sectors of the market saying that if there are different phases of the lockup, it would actually trigger more sell-off and triggering more volatility in the market. Now, if it is pre-IPO investors in unlocking the original shareholders, then there may be a hindrance to the secondary market trading. What are the responses there? Now, for 571Y chapter and the Schedule 1 and 2 on the Hang Seng constituent stocks, to set it at 100, 108, and 43% for the chapter. What are the reasons for that? And for CMU only clear, for the exchange fund, this is a full 100% subsidiary which had entered into an MOU with the regulators. And I'm happy to see this because the infrastructure of the financial market is important. And I see that the CE had mentioned that on the one hand, we have development in the fixed income market, and it helps with the internationalization of RMB. And also ICSD is to be developed into a international market securities depository platform. Can you tell us more about this, please? Thank you very much for the questions. First of all, on the consultation paper, and the third question on CMU and the cooperation with the stock exchange. The stock exchange will answer that question, and the SFC will answer the question about the positions holding. First of all, concerning the anchor investors' lockup period. There are different considerations. At IPO, for allotting to the anchor investors, if that proportion is high, according to the existing mechanism, it is 6 months lockup, and the disadvantage is that liquidity will be hurt. And in the consultation paper, we propose a phased approach to cancel out the liquidity impact, because where the stock issuance is locked up in the majority, it would of course impact negatively liquidity. Now, Ms. Kan had mentioned whether this would affect pre-IPO investors. It would cause unfair situation. Well, during consultation, we have heard opinions supporting and not supporting the thought. So we are looking into a final solution which will balance all interests. So when we have the conclusion, we will be coming to the market with an announcement. Concerning CMU, I will answer that question before we go back to position limit for SFC. For OmniClear, as Ms. Kan had mentioned, we would want to use this opportunity with the cooperation between CMU and Hong Kong. We would want to develop the ecosystem and long-term development of our market, and also help with the progress of internationalization of RMB. As for the content of cooperation, well, both sides are open-minded, and we are proactively in discussions. Where there is good news, we will be coming to the market for sharing. The SFC, right, for position limit, there are 3 considerations. First of all, for the 3 types of derivatives market, the targets in the past period of time, whether that had increased in volume. And secondly, what the market really needs. Now, for the position limit, where we see that it is insufficient, and as a result, the market or the market makers will build up their position in the market. We also do stress testing in increasing the position limit, how it would impact risk management. And that's why for the 3 products, for the HSI China index, that is where the demand is largest. Well, Chair, of course, we will have to look at the companies where the anchor investors are holding a large proportion of the stocks. Perhaps we will tailor the lockup period accordingly. Right. Jeffrey Lam, concerning the position limit, raising it to increase the market liquidity. While we do that, how do you address potential risks? And also, would the stock exchange be thinking of optimizing the suspension mechanism to protect the small shareholders of listed companies which have been suspended from trading? Would the exchange be lowering the public offer proportion so that the issuers will have more flexibility? And also another question, I do not know what the trading volume would be for today's market. The new issuances or newly listed stocks are also doing well in trading transaction volume. So will you be speeding up with the approval process with listings to perhaps make it more flexible for companies from around the world, in particular leaders in the technology field, to come to Hong Kong for listing? Will you be doing that, making more flexible for them? Well, first of all, for position limit, I will ask the SFC to answer the question on suspension and new listing approvals, the stock exchange will answer those two questions. Right, the SFC first. Thank you very much, Mr. Lam, for the question. For the position limit question, over the many years, the SFC had built up a comprehensive monitoring mechanism for the derivatives market, our stock market, and exchange trading. We have real-time mechanism to monitor the changes. In the future, we will also be doing so in real time for position limit. Internally, we have done some stress tests. If it's more than one person with position above the proposed limits that we have, where there is a contravention of regulations, whether the market can sustain that stress. And we think that it is at a reasonable level. That is why we have come up with this recommendation. The stock exchange, please. Yes, a couple of questions from Mr. Lam. First of all, the suspension mechanism. In 2018, we have done some review. During that time, the hope was that we shorten the suspension period and to encourage issuers to take actions to release a suspension. Well, overall speaking, with 3 months of suspension, the reason for the suspension, we will allow the issuers, or we will give the issuer certain guidance. And in the past few years, we have looking at the efficacy of that. We would want the issuers to resume trading ASAP in general. And as mentioned, we are looking into an OTC market after suspension. Is it possible for the companies to be put into the OTC market for trading? In the consultation, there is a concept in principle. As the CE had mentioned, last year there was a price discovery consultation, and we are now examining the responses, and the responses have been very positive, actually. On public float, we see that for listed companies after listing, there are certain opinions from the market concerning the public float. In October last year, in the consultation, we asked the market, apart from the time point of IPO with a public float requirement, after listing, what should the public float be? And the market had been positive. There are different views, rather, and we are looking at the different views, and we would want to come to the market with announcement soon. As for leading companies, we have the third question. We have talked about the tech channel, and we will be announcing that soon. And last year, for a number of measures that we have put into place, we have welcomed 71 companies coming to Hong Kong, and it was $88 billion in IPO capitalization, which is an increase of 90% year on year. And this year, for the Hong Kong market, we see that investors have high confidence in Hong Kong. The first quarter, it was 247 billion. It is a 144% increase year on year. And my department recently had been very busy. The IPO market and also refinancing activities have been very active indeed, reflecting that issuers and investors are confident in Hong Kong, and we will continue to review the listing mechanism together with the SFC to cooperate and openly discuss different possibilities, and we'll come to the market for announcement when time. Chen Kin Paul, I'm a director of the stock exchange. We welcome the optimization measures. To see the market active again is good. Without 100 billion turnover, the government actually will get a 30 billion tax. So the budget deficit would be resolved soon. with that trend. And definitely we see the market bubbling up, and we also see consumer consumption increasing. And Ms. Chan, it's very important what you do. Your work is very important to the economy. Now, the SFC does supervise the stock exchange, but by so doing, how does the SFC respond to the market by cooperating with the stock exchange in providing more impetus and energy to the market? And that's why in the paper it's very important what you mentioned about optimizing the vetting procedure, 40 business days for confirming the suitability of listing. Now, there is a question. The SFC should look at the major aspects of the application. As for the stock exchange, it should have another angle. But why is 40 days needed for both? Now, even with this particular amendment compared to the international market, is this in keeping with international standards? And a third question, as Ms. Chan had mentioned, for companies such as Alibaba coming to Hong Kong for primary listing and being included into Stock Connect, that is good. And that we do see a lot of transactions, trading volume as well. So this is in keeping with our direction for listing. For the U.S. returnees for primary listing in Hong Kong, are there some shorter time period and more streamlined vetting process, for example, less than 40 days? Well, first of all, for the optimization of listing vetting, the SFC can answer that first question first. The main question is why 40 days? Why is not the SFC shorter than 40 days? That's a main point of my question. Right. And the stock exchange will then talk about the process for vetting and also facilitating overseas companies in coming to Hong Kong for listing.
In relation to your question of why 40 days, I think one of the things to bear in mind is the fact that these are very lengthy documents that other people have been working on for, in many cases, many weeks prior to sending it into the SFC. And so therefore, we, like the exchange, are seeing them for the very first time. In terms of the 40 days, that's a cumulative effect. It's not that we take 40 days to respond. We normally respond within 20, and after that, much more quickly, dealing with each individual issue. You asked about whether or not this is in common with other jurisdictions. It's slightly harder to do international comparisons because a number of other jurisdictions, you don't know that an application has been made until they actually publish the document, because it's entirely secret throughout the entire process. And so therefore you don't know when that application was made. Therefore you don't know how long they take. What I can tell you is, broadly speaking, it is in the hands of the regulators, both us and the exchange, roughly about a third of the time. It is with the advisors, who should know everything about the company because they've done all the due diligence, roughly 2/3 of that processing time, whilst they respond to our questions. So in terms of who is taking the time to review it, it's mostly in the hands of the advisors.
Okay.
Well, let me have the answer to the other question first. Let me supplement. Indeed, in terms of the vetting timetable, there are many participants that have contributed their views. That's why last year, together with the SFC, we have announced the streamlined procedures. Members have indeed made their comments. Now, we talked about the 40 business days. Now we are faster. In 2022, the median is 61 days. In 2025, March 31st off, we achieved 28 business days. There's never the best. Things can be better. Now, Mr. Chen, you talked about the China concepts stocks. If they want to come to Hong Kong, can we make it faster? As I said, we are adopting a parity approach, and there are certain China concepts stocks. If they want to come to Hong Kong, it would depend whether they fulfill our listing rules, and there may be some impediments. And the whole focus is to remove all these impediments. As to vetting, we are adopting a parity approach. Mr. Chen, in the interest of time, I'd just like to say that this review has been going on for some time, and there are certain improvements that would be good for Hong Kong. I hope that there would be further reviews. 40 business days would still be long, although this is an improvement. Now, what is the exchanges doing and the SFC doing? Now, between the two bodies, how can you make sure that there will not be any duplication of work? I hope that you will focus on this in the next review exercise. I think I'm going to draw a line in order not to overrun too much. Please keep within the 4 minutes for the Q&A. Ms. Starry, Chairman, the financial market is one of the most important roles in Hong Kong. The country has been very supportive of us. We've seen that the financial center is getting more active. There is a pipeline of IPOs. The turnover is increasing. There is improvement in the Connect scheme. There may be challenges in the short term, though. I'd like to follow up on Dr. Tan Yueheng's question. That the white paper on the capital market is coming down the stream. It is on the horizon. This is mapping out the direction going forward. Can you tell us how soon this will be published? Who will be spearheading this? Second, the financial summit, Hong Kong's financial center can provide financing platform for the world. Now, this is to enable business to come to Hong Kong and mainland businesses to go outside of the mainland. I know that there is a timetable for the summit. How many sectors will be taking part? Can you tell us more details? Yes, any details there? Thank you. Thanks very much for the question. First, about the summit. This is put forward in the budget. We are trying to highlight the fact that we can use we can serve our economy with our financial sector, and we can also gather together the business community in the world to come together to explore opportunities. We will be making the announcement, but for sure this will take place within this year. Next to the question about the future development, the regulator or the FSD, the Bureau have been collecting views. We would be publishing the study findings. The FSDC and the regulators will be listening to members' views. We will be gathering all manner of comments. As to the details, as to the publication, we will make the announcement at the right time. Yes, this summit on the financial sector, I know that there is a timetable. I hope that you will be seizing the opportunity to achieve what you said you are going to be achieving, to make Hong Kong a financing center. We will be playing a role for the coming in and going out. I hope that you will not leave it till the end of the year, and I hope that you will share with us all the details. We hope that we will take this opportunity to make the financial center in Hong Kong shine so that we can play our role that much better. Dr. Su Chong-wing, Vice Chair. Or Dr. Kennedy Wong, Chairman, thank you. I'd like to take this up with the Undersecretary. There are some non-executive directors. I'm not going to dwell on the legal side of things, but these non-independent or the independent non-executive directors, they are the stakeholders in the financial sector. It seems that the SFC over the years is imposing higher and higher requirements on these INED. There are some court cases, some legal proceedings that are going on. Now, with these legal proceedings, they will sustain liabilities to the tune of tens of millions of dollars. Now, if these become precedents, then I'm sure that would be detrimental to the market operation. It would be hard for us to identify the right people to become the INEDs. Now, INEDs in the major global equity market would exist because they would improve the governance. Now, do you think that there should be D&O liability insurance that should be taken out for the INEDs? Would there be any requirements that certain hours of training should be given to them? Now, this has been practiced in the mainland. Now, the INEDs would find it difficult to take out an insurance. If you impose this requirement, just like the law firms, they have to take out the liability cover. If you make it a practice, certainly it would be good for the enterprises, it would be good for the stakeholders and the INEDs. Yes, Other Secretary. Chairman, thank you. Thanks very much for the question. A couple of things there, as the member said, INEDs are important to corporate governance, so we attach a lot of importance to this area. There is some training requirement for INEDs. Para 12, we have the paragraph devoted to the corporate governance code. We heard the members' view, and I'm wondering whether the exchanges have any comments to add. Yes, Hong Kong Exchange or SFC?
Was about SFC taking action against INEDs at the end of an enforcement process. In relation to that, that's purely a question of holding those who are responsible for the activities of the company responsible for what has happened and what has been done. And so therefore, in those circumstances, we would take a case against them that is then processed through, sometimes through the courts. In relation to the D&O insurance, I don't think we, nor the exchange, would necessarily say that we would mandate D&O insurance on those. Do I think it would be sensible for them to take out insurance in those circumstances? Yes, I think it would be sensible.
Well, I very much hope that the authorities would consider that, because in the securities market, the chairman must be aware, it would be very hard, increasingly hard to find people or eminent people to become the INEDs. Now, if this has become the case law, people will have to sustain millions and millions of dollars. This would set a very bad precedent. I think the INED should be given the protection. It should be mandatory for the insurance to be taken out. Right? Bureau, the risk for the INEDs. Thank you. As I said at the very beginning, high-quality INEDs would be important to corporate governance. How can we make sure that there would be good enough quality INEDs would depend on the training, and we really do need to have these INEDs. As to how we can improve the situation, we will be liaising with the relevant bodies in this regard. Mr. Lee Chun-Keung, Chairman, there is a mention of T+1 settlement and also RMB-denominated shares. Do we have any timetable? How soon will this be taking place? Second, how can we make the pie bigger? Now, what are you going to be doing to liaise with the Greater Bay Area to achieve integration so that in the Greater Bay Area there are products available for people to invest in. Third, as some fellow members said, in the GEM board, we have seen the share prices plummeting really dramatically, and some have been delisted. Would there be opportunities for OTC trading so that these delisted shares can be traded so that people will see a revival of these shares? Thank you. Thanks very much for the question. On the question of T+1 settlement timetable, the Hong Kong exchanges are upgrading the system and also introduce the new functionalities into the system before the end of the year. We hope that we will be able to cater for that. In the first half of the year, there will be consultation with the sector regarding this shortening of the settlement cycle. On the second question, the RMB counter, the mainland and Hong Kong regulators have reached a consensus regarding the arrangement. Both of us are making technical preparation. Once this is done, the regulators of both sides will give the approval. As to the timetable, there will be an announcement on the part of the regulators. The Hong Kong exchanges will be talking about the arrangement and development regarding the listed shares.
Stock exchange. Yes. For delisting, I've already answered that question. Actually, late last year with the consultation, there was one item which was on exactly that. Do we need to consider a platform of the exchange? So this is not the for the GEM board, the responses that we have received are supportive of this. And if that is the case, we will be going ahead with this. On T+1, Chair, this is a suggestion. There will be a stable coin coming out for Hong Kong. If this can be bound together and through the bank there can be transfer of funds, it will be a lot more streamlined and efficient. This is a suggestion. Well, thank you. Next, myself, it will be more than 4 minutes, I'm afraid, to mention all the suggestions from the industry, but I will just mention some of the views that I have heard. Now, a number of members have mentioned the positioning of GEM board. The main board and the GEM board, the difference between the two is large. And in the market, there are some SMEs which are looking for a good venue for listing or channel for listing. So whether it is a sponsor or the underwriter, they would want to have this particular opportunity. But with the reform, it has not activated the market. And for after delisting, OTC trading to be allowed, if that can be considered, and also the board lot, this is also being considered. Hopefully it'll be faster in decision. And also for a number of institutions, they are hopeful that there is Web 3.0 development and virtual assets. A lot of overseas exchanges already have derivatives on related to this, but it seems that we are still lagging behind with ETFs, etc. And also concerning the interest income from the interest income, we hope that it can be more competitive compared to the other exchanges. On collaterals, perhaps that can be made more flexible. And another view from the LegCo actually was that for paperless securities market, the 6 subsidiary legislation, we have done the scrutiny. So in the future, should there be any fees related to the industry or the market? anything that would increase the fees, let's say for the 500 respondents, or if it's half and half or whatever, but I think most of the market participants have choices. So if you want to attract financial institutions to come to Hong Kong for operation, we would want to lower their operation cost. And we do not want to increase costs for operation of a paperless securities market. Well, I'm sure the stock exchange and the SFC have heard these views before, actually. Well, thank you, Chair, for reflecting the views to us and the suggestions and opinions on the development of our securities market. We appreciate that, and we will be working together closely with the SFC and the stock exchange, and we'll look at overseas experience to optimize our market and also to come up with relevant policies. Now, concerning the lot size, the SFC is looking into this, and there will be improvements, suggestions or mechanisms coming out, and so as to facilitate trading and also efficiency by designing suitable lot sizes. Now, as for the product side, I will have the SFC and the stock exchange answer the questions that you raised or the points that you've made. The SFC, very quickly, please. Right. The chair had mentioned a number of areas of interest and collateral. For example, we are looking with the stock exchange on that. The interest income from cash collateral that you mentioned, we are looking at the stock exchange, looking together with the stock exchange on this. As for paperless securities market, the share registrar fees, for example, is one point in consideration. The stock exchange fee for also, and for the former, we have had a consultation paper issued. We will be listening to the market opinions before we make the final decision. Stock exchange, I have no further supplement. The Chair, the 6 points that you mentioned just now, we are in close discussion with the SFC and fully consider the market opinions, and at the right time we will be coming to the market for consultation and announcements. Right, we have drawn the line, but there are 2 more members who want to speak, so 2 minutes each. Duncan Chiu, please. Right, very quickly, Chair, a lot of technology companies, especially mainland tech companies, want to come to Hong Kong for listing, but their share prices have been depressed. And also, we have Chapter 18C, etc., allowing these listings, but are there other flexibilities? For example, Chapter 18A, their shareholding structure for mainland companies, they will need to restructure, and that takes time before they can come to Hong Kong for listing. As for companies with great potentials, with excellent investors, perhaps for these companies, we can attract these mainland companies to Hong Kong for listing with more efforts, please. Chair, overall, we'll be listening to the market. Perhaps the stock exchange can respond to some of the points that were raised in the question. The stock exchange, please. Chair, for the technology sector, the companies they're in, we understand that they have some unique demands and needs, and that's why we have this proposal of the tech channel so as to address some of their pain points, including the 18A concerning the shareholding structure or the valuation considerations. We hope through this specific channel we can understand these companies' needs and to discuss together with the SFC whether there is room for optimization. Next, Adrian Ho, please. Thank you, Chair. A very succinct 2 questions. First of all, the price setting at IPO it says that there will be investors with bargaining power included in that. So for the would there be an imbalance caused between the small shareholders and the institutional shareholders? And how can we avoid over-concentration? And secondly, for stamp duty for market makers, why is there just these two areas being exempted? Is it because these two realms contribute greatly to the liquidity of the market? And have you calculated the impact on our budgetary or Hong Kong government treasury income? Right. For the second question, the exchange fund and also derivatives trading, well, different products, we will have to be correct for exemption for stamp duty. And we look at the development of the entire market. For certain financial sectors and products, we want to activate the trading for these products. And that is why we have come up with this exemption proposal. The stock exchange, concerning the imbalance of interest, actually the review this time is because we notice an imbalance of interest, exactly that. For the small investors in the pricing of IPO, they have no right in influencing the pricing. For the sponsors and the issuer, it is the institutional investors who have that chance to participate in the pricing of IPO. Where the subscription rate is high for IPO, then a part of the IPO will be reserved for public hands, small investors. And therefore, some of the institutional investors would hold back. They would not spend so much time studying this new IPO. And where for IPO there is an oversubscription on the small shareholders. However, after listing, there is no sustainability for the price of the stock after IPO. So we are looking at this imbalance of interest. We would want there to be a better balance. So that is a reason for our consultation. The period for consultation has ended. We are now in an analysis stage. We are open in our attitude. We will look at the conclusions from our analysis and come up with a proposed solution. All right, this ends this particular section of the meeting. We thank the SFC and the Stock Exchange for coming to this meeting. Next agenda item, and development of fintech in Hong Kong. The administration and the representatives, please, will be coming into the meeting.
And
coming to this meeting, we have Mr. Christopher Hui, Secretary for Financial Services and the Treasury. I will not introduce the other delegates, but we have the SFC, the Hong Kong MA, the Insurance Authority, the Cyber Port, and also the Invest Hong Kong, and also Office of Government Chief Information Officer, and also MPFA representatives who are here at this meeting. Yes, after you have settled down, we will ask Mr. Hui, Christopher Hui, to give us an introduction. Thank you. together with the financial regulators, Hong Kong MA, the SFC, the Insurance Authority, the MPFA, AFRB, Oasis, and also Invest Hong Kong and Cyberport, to be here to talk to you about some of the latest development and initiatives for fintech in Hong Kong. And as you know, as an international financial center, we have robust regulation for fintech, and also we have abundant business opportunities and capital support attracting fintech enterprises to Hong Kong. There are more than 1,100 such enterprises in Hong Kong, including third-generation internet enterprises and different types of innovative and convenient financial services. According to the latest report of Global Financial Centers Index, Hong Kong's ranking is now 4th in terms of fintech level, from 5th. The government has also been working closely with a number of sectors in developing fintech and with close collaboration with the regulators and stakeholders. And in our paper, we have talked about the development of fintech and in particular virtual assets. Let me give you a brief account. First of all, on the financial infrastructure, the PBOC and the Hong Kong MA are actively implementing interconnectedness for online payment system with Hong Kong Express transfer system and also real-time small amount cross-border remittance services. And this will be launched in the middle of the year at the earliest. And also for business data link, it has been launched by the Hong Kong MA, and there will be a further exchange gateway with other departments of government, including the Land Registry, from this year onwards. And also there is further optimization for the process of approving mortgages and loans. And also September last year, the Hong Kong MA launched the second phase of Digital Hong Kong Dollar pilot scheme. And in terms of building a more active fintech ecosystem, last October we issued a policy statement on the responsible application of AI in the financial market, and we want to work closely with the regulators and stakeholders to encourage financial institutions to accelerate quality productivity with fintech, and also to update existing regulations to cater for the needs of AI. And also we have a sandbox for generative AI to provide technological support and also to provide opinions from the regulators. Now, green finance is also very important, and we have already come up with a scheme for non-accredited green efforts. In the first half of the year, there will also be a Hong Kong green tech roadmap. Now, talents is most important. In terms of talents, we continue to have this pilot scheme for the training of fintech talents. We already have 560 students, and also we have 80 GBA training scheme, and we will continue with that. And in the summer there will be another cohort. The Hong Kong MA and the PBOC had also allowed for Hong Kong residents to use to top up wallets for RMB payments. And also together with Enbridge in June of last year, we have already come up with the proposed products, and allowing public companies and private companies in participating in that. And in October this year, there will be the FinTech Week organized. And also in virtual asset, we propose the licensing regime for over-the-counter trading and custodian services. We already have 10 licenses issued, and there will be a second promulgation concerning FinTech and virtual assets development. Now, for the December of last year, the STB and Hong Kong MA introduced the stablecoins bill into the LegCo, and we are fully supporting the LegCo in scrutinizing the bill. And also, we have a public consultation concerning licensing, and we are collecting views to come up with the licensing framework, and we will be coming to the public for further consultation this year. Now, as for tokenization, in February of this year, there is a roadmap for virtual assets trading. And in August of last year, there was the Ensemble Sandbox concerning tokenized investment products. And also there had been the guidance given out by SFC and Hong Kong MA concerning tokenized investment products issuance. That ends my introduction. We are very happy to answer your questions. Right. We have 4 minutes Q&A.
Dr. Wendy Hong, Mr. Lee Chen Kang, Dr. Johnning, Mr. Tan Fei, and Ms. Carmen Khan. Dr. Hong, Chairman, thank you. Now, with innovation in our technology, we have seen remarkable improvement or progress in our fintech sector, but there are still some shortcomings. We've seen a deep fake, and also there has been an increase in the number of scams. In 2024, we have seen a tenfold increase in the number of scams. I'm not sure whether the number is accurate. That because of the development of fintech, this has become a fertile ground for scams. Is it because of the supervision not being good enough and not being able to catch up with the situation? How can we make sure that we can keep up with the development and we're not stifling the development here? Second, we are discussing this very important subject, fintech, today. The fintech is on the basis of technology to empower. The finance for tech is a different thing. We are using finance to empower technology. The mainland has published some articles in this area. There are so many areas in Hong Kong that have to be undertaken in the 14-5-year plan. Hong Kong is a fintech center that we are coming up to the 15-5-year plan, and we should really promote the development of Hong Kong being an IP center, IP trading center. We should also promote the development of cultural sector, but there are so many pain points like the IP pricing. We do need to have policy formulated in this area. So while we attach importance to fintech, will the administration be also developing tech and finance? Well, let me take the question. If I understand the question correctly, we should be using finance as the means to promote the development of technology. We are doing this the other way around. There are a couple of aspects here. Now, in terms of financing, how can we serve the tech companies better? Now, before this item, we've heard from the Hong Kong exchanges and the SFC that there are so many measures to improve the systems. Second, how can we liaise with or link with the real economy instead of just looking at tech in isolation? Now, we are rolling out all these sandboxes, and we are putting forward these tokenization measures. Not only will this benefit the financial sector, the whole economy, and the entire value chain will benefit from that. In a way, this would certainly enhance the functioning of our economy. Now we have the tokenization of the securities or the debentures or the bonds. The settlement cycle has also been shortened, and this is bringing about the tangible benefits to our economy. We'd like to listen to members' views to see what use cases can be identified. We can use finance as the means to promote tech development as well. As to Dr. Hong's question, the other question that we have from the fintech, how can we make sure that the participants or the investors would be able to understand the risks involved? Now, we have different organizations. We have the Investors Education Committee, which is a cross-disciplinary committee. The MPF, the securities company, the banks are also involved in this. We are rolling out measures to make sure that the market is well enough prepared to allow the investors to make sensible decisions. Mr. Lee Chen-keung, Chairman, thank you. The fintech is developing by leaps and bounds. There are blueprints and roadmaps, and there is a need for us to do the catching up here. The Secretary mentioned the sandboxes and the roadmap. Can this be speeded up? Can this be broadened in scope? And cross-boundary cooperation and the GBA opportunities. As we said, we have the CDI. We also have the CNY pilot scheme. How can we get integrated with the mainland regulations in terms of privacy and anti-money laundering? How can we make sure that while we can inject confidence into the market in this regard? Third, the talent issue. In Singapore, in the Middle East, they do have tax concessions to lure the right talents in fintech. Now, we do have all the talent schemes, but it is suggested that they are cumbersome and the threshold is too high. How can we speed up the acquisition of talents? Also, in terms of the legal aspect, how can we make sure that we evolve with time so that blockchain, Web3, and all the rest of the developments and digital currency, how can we make sure that we can keep up to date with the trend? Secretary? Right, first of all, about the talents. We've never stopped our work there. We have been reviewing the talent list to make sure that we have the talent that would be needed and would be incorporated into the list. Now we have the commodities market, the precious metal, and that there is a lot of development there. We've also included the fintech and accountancy, and work has not stopped in this area. The second thing is members are concerned about the implementation. How can we make sure that we can implement this? Now, the LWB does have the talent scheme. There are tens of thousands of people who have already come to Hong Kong, and many of them have to do with the financial sector. How can we take full advantage of these pipeline of talents, and how can we train up the local talent and provide more opportunities? These are the things that we are putting on our thinking cap. The third one is about the speed. Now we have different sandboxes and different schemes. How can we speed things up? Perhaps the Hong Kong MA or the SFC can respond there. Hong Kong MA? Yes, on the ensemble sandbox. In April last year, we put this forward in order to take forward the development of tokenization. The progress proves to be satisfactory. The build-up has been completed in August last year. We're working in collaboration with the trade regarding the testing of tokenization. This is a new development, and there is a lot of work to be undertaken in terms of technology and the use cases, the commercial viability. We are looking into these areas. Now, for the sandbox, other than local participants, we are liaising with Brazil, France, and Thailand regarding cross-border point-to-point testing. We will continue. This is continuing at pace. If the stakeholders would be interested, we are only delighted to liaise with them. For SFC, if I may, Chairman, we are working with the relevant body regarding this sandbox to look at the tokenization proposal. We give suitable regulatory guidelines to the participants, and there will be new use cases that will become available so that the token market will be developing that much more efficiently. Dr. John, Chairman, thank you. I'm all in support of the development of fintech in Hong Kong. We've got a lot to show for it. We have attracted so many companies to Hong Kong, and this is something commendable. I've got two full questions. The first one is, I was asked by Dr. Hong, we are using fintech, and there are so many investment opportunities, and there are so many opportunities for the scammers to con people out of the money. There are people who got caught, Hong Kong people, there are new immigrants, individuals or companies that were conned. So you mentioned, Secretary, the education work. Will you be doing more education for the new arrivals? They may not be aware of the local regulation. They're vulnerable to being exploited. Second, Web3 and VA, virtual assets. We are promoting the development there. In the U.S., the new term of administration has been really proactive, and they see VA as the means to resolve the long-term debt issue. We have attracted 10 companies to Hong Kong. 10 licenses have been issued. There are so many who are waiting in the wing, and I'm wondering whether there are any policies to support these licensees for them to take root in Hong Kong and further develop here.
Chair, first of all, the suggestion made by the member is very good. It is not just about from the supplier side that we provide information, but also with the recipient, and we have to think about that as well. This is a highly internationalized market. For some of the things that we offer in this market, perhaps some quarters are not very clear about. We would want there to be more focused messages, and in particular for the Investment Education Council, they have been trying to do that, whether these are new entrants to Hong Kong, mainlanders coming to Hong Kong, etc. And there was another suggestion just now, and that is how can we not only attract the new institutions and companies, but at the same time for those who already are here. Just now, we mentioned that there are 10 that are already licensed, and the SFC had recently provided a mechanism for coordinating with these 10 licensees to understand their needs, to see how they can optimize a regulation. Perhaps the SFC can supplement on that. Yes. We have a group for consultation on virtual assets. And for the platform participants, we have invited them to this group as well. And we look at, in the short term, what are some of the offers we can provide so as to enliven the market even further. And the SFC also has a roadmap promulgated concerning virtual assets. And there are 5 pillars to this: access, safeguard, products, infrastructure, and relationships. These are the 5 pillars. And these will be the pillars to continue develop the market. And on these 5 pillars, there are 12 measures, and these are all with the intention of making the market more vibrant. And today we'll be announcing that the platform for virtual assets to allow collateral activities, to provide collateral to their clients, that is. And so through this, for spot tradings, these can also be used as collateral. We'll be making the detailed announcements today, and with the purpose of further developing the market so that there will be more products and services which can be brought to the market. Next, Tang Fei. Thank you, Chair. I'm looking at paragraphs 18 to 20 of the paper concerning talents. And it says that there will be import of talents as well as nurturing of local talents. Now, if you look at paragraphs 18, it talks about the requirements for such talents. And definitely these will be quality people and no less stringent than the talents list in other areas. Now, concerning importing talents and nurturing local talents, will there be a differentiation in their accreditation? Would it be 6 to 7, that is masters and PhDs for overseas? As for local, would it be what programs will you provide? But the local universities, they already provide courses and programs for these grade 5 to 6 people, don't they? So, or are there certain short courses, etc.? But on the other hand, if there is an apparent discrepancy between the gradation of the overseas versus the local talents, that would not be good for public spectacle. And is there a coordinating mechanism whereby the regulators can provide a suitable balance between those that are coming from overseas and local talents? But basically, is there a difference in terms of the class or the grades between the two, please? Second question, what is the definition of fintech companies? Do they provide high-tech solutions for fintech or not? Rather, they use innovative technology for fintech, whether it is through AI or whatever, to do financial investments to replace a traditional, let's say, stockbrokers. I mean, in recent interviews, I mean, the Mr. Hui had talked about, over thousands traditional stockbrokers closing shop in recent times. So which one are you talking about? The technology part, or is it using innovative fintech methods to make financial investment services, to provide those services? I think mostly the understanding is a latter for fintech companies. So for AI, is it changing the entire industry? I mean, in the past, quantum investment had been less dominant in Hong Kong than in, let's say, the U.S. market. Now, if we see more fintech companies coming to Hong Kong using innovative fintech to direct investments, I think that will be more and more prevalent. So the modeling of from fintech is replacing investment psychology. So the underlying logic is different for the market. And the mainland is also looking at what would be a suitable regulation or regulatory framework in face of this change. It is innovation, but it has to be regulated as well. Now, with the financial white paper before and after? Will there be a study concerning the regulatory and the change in regulatory approach with this new development, please? So a number of macro points just to respond on that, and my colleagues can supplement concerning the definition of fintech or the corporations therein. They're in two categories: existing financial institutions in this new development. How can they innovate? So the existing ways and means how they can enhance that with technology. So this is a new industry approach using technology innovation to change the value chain in financial investment. So on the one hand, you have enhancement of the existing, and the second is something completely new in participation of the market. So there are these two categories. Secondly, concerning the financial market, how is it being affected and how is it impacting the regulatory approach or framework with new fintech introduction? We have been cognizant of this. For example, in the responsible use of AI that we have come up with recently, as you know, the adoption rate is 38% in Hong Kong for AI in financial sector, 26% globally. So for regulatory requirements and some of the measures, can we enhance those? This is a big topic, and we've always been working on it. A third area is in talents. We nurture local and attract overseas talents. How can we have a balanced approach in development, and we have a policy which will enrich our talent pool? Well, if you look at the talent list and the relevant areas that we're looking at, they are in electronics, they're in financial, in information technology, they're in computer studies, etc., and also for AI and also advanced coding, etc. So we want to bring in talents from all over and across the board. Anybody that will add value to Hong Kong, we want to bring in. As for local talents nurturing, we have a GBA FinTech two-way internship scheme for post-secondary students. And in October 23, when we launched this, we have already had 80 students with 30 financial firms participating. And the summer is coming. We will have a new cohort again. So in nurturing local talents and attracting overseas talents, we are multi-pronged, and it will be demand-led to feed the needs of our industry. Perhaps my colleagues can supplement the CE, having heard from the market. Yes, Invest Hong Kong. Thank you, Chair. Just in reply to the member's question, looking at this study in the UK, this is a highly influential institution that made this study for the financial hubs around the world. There is a survey concerning adoption of AI. Just now, Mr. Hui had mentioned we are now number one. Adoption rate is 38%, 26 being the average around the world. With this study coming out, we started talking to some of the financial institutions to see how they use AI. Well, there are two main points there. First of all, AI is still in the evolving stage. So adoption of AI is not, as the member mentioned, in making investment proposals and recommendations. Not yet. But for back office, process optimization, and where it is less sensitive in time and information, lowering of manpower input, that's being done. So this would be insurance company as well as banks. The insurance companies have a lot of agents, and and basically the insurance companies use AI in the back office. For algorithm trading, a number of institutions are studying this, but it is not mature yet. So they are doing their internal testing. It's not come to the market just yet. Next, Carmen Can. Thank you, Chair. I work for a financial institute, declaration of interest. There are two areas here. First of all, for financial institutions, there are the big ones and there are small ones servicing the average citizen. So in the paper concerning stablecoin legislation, it has just been completed, even though I'm not a member of the panel, but in participating in the scrutiny, one principle is that same industry, same risk, same regulation. So concerning whether it is the same, there is a lot of discussions and study. Now, during the scrutiny, I noticed that there's a lot of reference to Chapter 584 on payments. So is it the same risk as stablecoin? Since Mr. Hui is here today, I would like to hear his response concerning the study on stablecoin. We are definitely a pioneer, Hong Kong, on legislating on stablecoin. And also there will be a consultation on licensing. My opinion is that personally for the customs to do licensing, that's not appropriate. But with the SFC, since we have a trading platform on exchange and also on OTC trading, including custodian and also licensing, if it can be done by the same body, that would be good. So is there a response on that? Secondly, small is beautiful. I know Cyberport is here today. They have a pilot scheme, DPSPP. The application, according to last year's figures, was not very enthusiastic. There is some 500 million provided by the government, and a lot of people think that you give me $50,000, but ongoing there is transaction fees for future transactions paid to the bank, etc. So right now, the consumers can only order from the menu. Why can't there be a payment as well as order on the menu made at the same time? So that's P2M. So in your figures, how many are merchants? For how many are applications from merchants? The Cyberport is here, and also we would want to ask about transaction fees as well.
My last question is CDI. It has been around for 2 years. The administration said that 42,000 loans have been assisted. Now we have 360,000 SMEs. The number can be higher. Now the CDI and also you have included only the companies industry. That you have the Consented Data Exchange Gateway, the CDEG. Why is it that the take-up rate is so slow? That you can get access to the SMEs data with the CDI, but things are moving excruciatingly slowly. What is the next step? The lands registry. Now you're incorporating these departments. Will the DPO be liaising more and make it a lot faster? Right. I'll take part of the question first, and then defer to the Cyberport. Ms. Khan referred to the stable coins and the business there. We have the legislation there. We have the bill, and actually underneath the stable coin there is the fiat referenced stable coin. So the bill is actually predicated on this. And secondly, In our market consultation, the supervisory role of the OTC was discussed. There are 2 consultations to be undertaken this year. The first one is the licensing for the VA service providers, or VASP. I heard what Ms. Khan has to say, and in our revision, there will be further consultation on the market. Third, about the Cyberport specific plan, I defer to the Cyberport for details. Yes, please, Cyberport. Thank you very much, Ms. Khan, for raising concerns about this scheme for the SMEs. Let me bring members up to speed on the latest. When this assistance scheme was launched, the SMEs are in pretty difficult position, in particular the F&B sector, in particular those that have not yet embarked on digital transformation. We've liaised with a lot of stakeholders, the chambers of commerce, and mounted publicity. And we have presented to them all the advantages of being part of the scheme. And by the end of last month, we have received well over 7,500 applications. The number has significantly boosted. We meant to provide a quota of 8,000. This is not short of our target by too much. And we do have the startups taking part. And there are 360 solution providers that are providing the solutions to the SMEs to choose from. Ms. Khan, will you tell us how many have been approved and any specifics there? Yes, will you make available this in writing? And also transaction costs. Now, this has got nothing to do with the Cyberport. Will there be any policy on the part of the Bureau for the merchants, for the SMEs, to benefit from a lower cost? Yes, indeed, we have been communicating with the trade in terms of e-payment. I would like to broaden this out to cover more merchants. Now, for e-payment, the operators are offering some concessions to encourage buy-up. And under the Hong Kong MA, they are also trying to make this e-payment more popular. But as I said, it's not a question of making available the tools. We have to make sure that there is the take-up, the buy-in from the market. There is the desire to take part in the scheme. I think post-COVID, we are seeing a lot of advantages. We are seizing the opportunities to promote the adoption rate in this area. Mr. Biu Tang, a couple of questions. I am INED of the MBFA. Last year, we have invited professors from the Tsinghua University to come to Hong Kong to look at the situation of unicorns being present in Hong Kong. We have 4. They're mainly in fintech. It is understandable because Hong Kong excels in fintech, in finance. We have so many different talents and high-quality talents who are interested in the fintech that pays well and that is a really good career to carve out in. So fintech has been developing particularly strongly among other techs. And these unicorns are using fintech to subvert the traditional mode of operation. And are we able to export the fintech to other markets so that our global presence will be enhanced? Second, stablecoins. I'm a member of the Bills Committee, and I've got a question for the Secretary. Now, with the implementation of the ordinance, would you expect many enterprises picking the application? Are you going to be adopting a liberal approach to incorporate more potential players? Or are you going to be really selective to make sure that we will have really good enough players? There are some suggestions that 10 years ago we had all these virtual banking licenses being issued, and there was a bit of fanfare at the time, and today people get a feeling that these virtual banks are leaving a lot to be desired in terms of performance, and therefore the government will be very stringent in approving the stablecoins players so that we will have good, really solid players. Now, my last question is about the EMPF. On different occasions, the Secretary said that this is the most popular fintech in Hong Kong because every single worker or salary earner in Hong Kong would be using this. There are 2 points in terms of the EMPF I'd like to highlight. First, EMPF is an excellent tool, policy tool. During COVID, there are so many workers who were thrown out of a job, and they have seen a drastic fall in their salaries. Now, with this EMPF, the administration would be able to get access to all the data. Second, let me cite you an example. Can the members of the public be using the EMPF account to show their financial situation? Will there be any linkage between different systems to make it easier for the relevant bodies to get access to the financial situation of individuals? Sorry about being so verbose. Right, let me address the questions first, and then I call upon my colleague to supplement. We have nurtured so many organizations in the financial sector. Will there be any potential for a global presence? Now, there is some virtual bank that is operating in Southeast Asia, and there is a virtual insurance company that is also operating in the Middle East. And there are many locally nurtured fintech companies that can see ample opportunities elsewhere. And the Invest Hong Kong can fill members in on the further details. On the part of the government, we very much like to broaden their influence in the market so that they can serve the members of the public on a broader scale. And the GBA is one of the areas. Now, there is also a mention of the development of the stable coins. Now, before the bill comes to the council, where the HKMA has rolled out the sandbox covering the e-commerce organizations, the cross-boundary ones, so that when they design the regulatory requirements, they will be more in tune with the market, and they will be tying in with the development trend of the market. Third, EMPF. I'm grateful to Mr. Tang for his support, and assistance in rolling out the MPF. In fact, as you said quite rightly that in the MPF, it carries a lot of data, the personal emoluments, the status of employment, and all these data would come in handy. We are working hard on the onboarding of the trustees. Will there be an opportunities for us to get access to the data while we respect privacy? We can benefit or facilitate the activities there. There is opportunities there, but the most important thing is to get on with the eMPF first. All right, Invest Hong Kong, any short supplement? Thank you. Thanks very much. In 2024, the Invest Hong Kong has assisted 539 mainland and overseas companies to set up presence in Hong Kong, 67 of which are promising fintech companies, and they are bringing about direct investment to the tune of $20 billion and created 800 job opportunities. That for these 67 companies, through the Invest Hong Kong's FinTech Week and also the Global Fast Track Program, we are rendering assistance to them. In 2025, we will be consolidating the position there, and we will be leading the enterprises in Hong Kong on a delegation to Europe and the mainland to lure more fintech companies to enrich the ecology of our fintech system.
Chen Chenying next. Thank you, Chair. I have 3 questions to ask. Firstly, last week, Web3 and virtual asset panel, we have discussed this, and that is talents is most important in this industry. Through the talent scheme, importing talents into Hong Kong for the past 7 years, there are only 126, which is a number recorded. And at the time, the administration responded that there are some financial institutions which directly employs or imports talents from overseas, and if they do so, then they would not appear in this number. So on the one hand, there is this import of talent scheme, importing 126 such fintech talents, but what about the financial institutions directly employed or imported ones? Do you have that number so that we know in the past 7-8 years, fintech, how many talents have come to Hong Kong? If you have that information, if you do not have that information now, perhaps you can supplement. Second question on IPPS and FPS in Hong Kong. They will be connected, and this is in the papers even today, but there will be some tests on the systems. I would like to know how long will the testing take, because the next phase of testing will not just be on system, but rather mainland accounts and some Hong Kong personal accounts. There will be tests on payment transfer, whether this is on amount cap, or on speed testing. And this is important for capital. This will facilitate capital flow across the boundary. Now, because this is person to person in terms of the scenario, it is highly probable that it is where after paying a bill, other people are paying back the payer and things like that, or co-buying certain items and therefore paying back each other. So that would be the scenario, person to person. But as a next step, it may be C2C, involving SMEs perhaps. So I would like to know from the administration on these 2 questions. First of all, Mr. Low, on talents. Thank you for the question, Chair, concerning concerning the talents list. And for the fintech practitioners, and this is on this is under the General Employment Policy and also the Quality Migrant Admission Scheme and Admission Scheme for Mainland Talents and Professionals. And this is different from the other general talent scheme. And we are trying to understand from the Labor and Welfare Department what exactly is the fintech talents that have come into Hong Kong from the other schemes. Right. So we will have an accurate number sometime soon. Right. The other question, the Hong Kong MA. Right. On the connection of the two schemes, IPPS and also FPS in Hong Kong, it will be completed soon. Because this is cross-boundary payment, we will have to be working together with the PBOC on specific measures and also to discuss certain details. And when time, we will be announcing the scheme. Now, as for use scenarios, yes, the scenarios focus would be on P2P, and that is the Hong Kong and the mainland, the account numbers can be connected to make small amount payments. So this is to facilitate the connectedness between the two markets. Our strategy is to gradually open up the service wider. At this stage, it would be P2P scenario. Through this, we understand the actual functioning and accumulate experience, and then we'll be extending to a wider scope. After P2P, as the member had mentioned, there may be C2C and SME or commercial payments. So at a second stage, we'll be talking to the PBOC about these possibilities. Next, Tan Yue Hang. Thank you, Chair. For Hong Kong, there had been very good achievements, very apparent achievements in fintech developments, and we have become a hub in that. Now, for the new quality development, on the one hand, we have traditional industries enhancement, and we have new industries engendered. For fintech, it is the same. First of all, there is the enhancement and reform of the traditional incumbents, and secondly, new industry trends development. Now, for the latter, it's been going very well. For example, virtual assets and also Web3, they've been developing well. For traditional financial, to enhance the capability of that, because they have always been the pillar of Hong Kong in terms of financial sector. In this particular area, of course, there have been achievements, but I think for the competitiveness of the entire financial industry, I think there need to be certain enhancements. And Chair, as we know, it's difficult to change the old. It's easier to bring in just the new. And so for there to be innovation in the financial industry, of course, we do not slacken our pace at all. For example, scriptless securities market that is being implemented, and also there are other steps as well. For the traditional financial market, for instance, in terms of scriptless, we first of all implement that well, and then I also know that we have been pushing this forward for a period of time now. Now, apart from the traditional going innovative, at the same time, in other areas, for example, for the relevant bureaus, etc., where they pertain to financial institutions, for example, in system upgrades, or the technology office, there are certain schemes which can also be applied to financial institutions as long as they have the willingness to enhance their technology side. And a third point is through market development, we can further enhance the existing financial institutions in their innovation. For example, inclement weather continued trading is one example, and also the connect schemes, etc., and scriptless securities market, etc., are all case in points. As they phase up to new policies, new customer segments, they will have to enhance their practice. So we will be multi-pronged and comprehensive in our approach. There are 3 more members who want to speak. We draw the line. Starry Lee next. Thank you, Chair. Fintech is the future of our economy's development. And we see that finance plus technology, we can contribute to the country and also in RMB internationalization as well. Now, for talents nurturing, I think there is a huge need for fintech talents nurturing. But I notice that in the universities, for fintech courses, they lag behind demand. So are there plans in this regard? The country is emphasizing education and technology being integrated. And I think that for fintech, it is especially important that education and the technologies be linked up more sufficiently. Perhaps you can talk to the Education Bureau, etc. Right, Chair. We have to be cross-sector in our approach, have closer ties so that on the one hand we develop the financial market, encourage fintech, and at the same time we have the talents to support that. This is a big topic. For the tertiary education institutions, they're working together with the stakeholders, ourselves, and also the EDB in providing programs and courses to satisfy market need. The Hong Kong U, Cyberport, and in 2018, May, they have come up with an online program for fintech. We do want to see more integration. On the one hand, as the market develops, we want to see the talents nurturing in catching up and supporting the development. Now, apart from learning and teaching, we want there to be practical sessions as well. And therefore, we have subsidized schemes where the students can have practical hands-on experience on site. We will be strengthening these. Chair, the country says that we have to be strong and we have to build up our education. I think the universities are slow in offering new programs and courses. Just now, Chair, you have been very positive in your description. Perhaps we can have more data provided us in the future. But I would say for many of the tertiary institutions, their programs are more or less the same as before. Perhaps there is more technology element to them, but I think it does not catch up to our need for manpower and talents. Perhaps you can do some research there and at the right time do share with us, because I do see that the mainland is much faster in pace than Hong Kong in this regard. Chair, I'll respond this way. Knowledge changes as the industries change, and the technology part needs in fact needs enhancement. For example, in fintech and in other areas, tokenization, etc., there are a lot of courses and programs and learning elements which are being offered. But on the other hand, there are certain commonalities. Yes, there are changes, but there are certain basics as well. So we have to go to the core concerning these commonalities in knowledge. So we'll be talking to the relevant bodies, for example, through Cyberport. We can work together on innovating together with the education sector. Cyberport, you want to supplement? Thank you, Chair. Thank you, Mr. Hui. Cyberport, we have set up the Cyberport Academy, and we will be very closely working with the education institutions to provide fintech courses to support the industry's need. Thank you. Next, So Chang Wing, please. Thank you, Chair. Generative AI is already very commonplace, and the government is also encouraging this. In paragraph 11 of your paper, you say that for the financial regulators will continuously review and update the existing regulations and guidelines for AI usage. Now, for generative AI, there are some risks which may not be apparent just yet. So for the regulatory information and knowledge, there will have to be a balance. In the past, SFC, the Hong Kong MA, the Insurance Authority, these regulators in the past, they have been working in silos. Now, since we have AI and generative AI, it being so powerful, my question to the administration is, have you considered enhancing the synergy among the regulators to supervise the new developments? Because very clearly, effective synergy and collaboration would definitely enhance regulatory capability and also avoid any blind spots in regulation.
If I understand the question correctly, basically, we do need to have supervision, but it doesn't mean to say that there is a lack of coordination. The Bureau is precisely playing this role. Second, the application of AI. In my introduction, I said we have published the policy statement in which we are adopting a two-pronged approach. While we take forward development, we should identify the risks for supervision. And the supervisory body has or have rolled out all these measures. Like the SFC has reminded the players regarding the generative AI. And the Cyberport and Hong Kong MA also announced the list of the participants in the sandbox. And the Financial and Accounting and Financial Reporting Council has also introduced measures to make sure has rolled out measures to make sure that all the players understand all the requirements. Generative AI is very powerful, and the underlying logic should be really regulated. And the Bureau, as the coordinating body, has been doing this kind of work all along. It's my turn at last. We have seen from these papers all the work that has been undertaken by the government to promote the development of fintech, and we're going to be having the second policy statement regarding VA, virtual asset. I agree with most of the members that there are 8 digital banks and 4 virtual insurers and 10 VATPs. How can we make sure that they will be able to develop their business? The pain point is that their scope of operation is rather limited in terms of geographical location. How can you make sure that there would be further development in the GBA under the Connect scheme? Now they've been awarded the licenses. Let's say the virtual asset. The scope of operation is rather limited, and there are also some restrictions regarding the investment. I'm sure that you want to balance the development against the risk. But for professional investors, would you be revisiting the definition that people who have money may not be sufficiently professional? Those who may not be as well off may be very professional. So if you look at the definition in terms of the asset, you may not be able to allow people who are really well up in the system to take part. There are people who are really having a lot of assets who may not be germane with the system. So how can you make sure that you will be loosening up the restriction to allow more players in? Secretary, Chairman, you've got a point there. In taking forward the development of the market, we have to make sure that the market is developing in a sustainable manner. We have to have a dynamic market. The SFC can supplement this. Recently, in terms of the VA TP, we are allowing more opportunities for them to develop their business. There is a communication, there is a mechanism to understand their needs. And second, as we said, there will be a further announcement regarding the way forward. I think as regulators, we have to strike a balance. We look at the demand of the market, and we also have to foster development there. SFC? Chairman, as we said a moment ago, we have formed a consultation group. The trading platforms have been invited to share their views with us about the way forward and what priorities that should be given. We have been maintaining pretty good communication. We understand their aspirations, and we will be making the announcement today to enable them to provide the services to the customers. And also, we can cover the ETF as well. And we are the first jurisdiction in Asia that is doing this. And we are promoting the market development there so that the investors would have more choices, because this would mean more profits for them. and the ETF would be more competitive. So we will be doing more of this. As I said, we have the roadmap. There are 12 enhancement measures in the pipeline. We are prioritizing them and get on with the ones that are more important to make sure that the trading platforms will enjoy more business. Thank you very much so much for this item for today. Thank you very much. Item 6, consolidation of the financial arrangement of 6 seed capital funds. Shall we invite the administration in, please? I'd like to welcome the FSTB, the Health Bureau, and the Education Bureau to this item of the agenda. Okay, shall we invite Mr. Christopher Hui, Secretary for Financial Services and Treasury. Chairman, the 25-26 budget, it is announced that we will be reinforcing the fiscal consolidation program, and we will focus on controlling expenditure, optimizing the resources, and increasing revenue. And in terms of financial resources, there are 6 seed funds involving $62 billion that is proposed to be returned to the government. We are making proposals in this regard and consult members here. The bureaus and departments would, depending on their needs, set up funds outside the general revenue. And there are 42 such funds, 23 operating as a capital seed fund. There is government injection, and they're using the returns for operation. It's only in special circumstances that they would be using the principal. When the new measures are implemented, the government will need to make injection for the funds to get more returns. Now, the operation of the capital seed fund will lock up a lot of financial resources. And this is limiting the government's flexibility to deploy the resources to areas that are needy. In order to facilitate the flexible use of the resources, we have identified 6 funds: Hospital Authority, Public-Private Partnership Fund, Research Endowment Fund, Language Fund, Student Activity Support Fund, Qualifications Framework Fund, and Gifted Education Fund. The return will not undermine the operation of the funds. We have reviewed the financial situation of them. We have looked at the expenditure and also the planned initiatives. We have reserved funding for the expenditure for the coming years, and 61.5 billion will be returned to the government. The objective, the supervision, and so on will remain unchanged. In 2028, these 6 funds financial arrangement will be reviewed, and depending on the latest situation, financial situation, will decide on the financial arrangement beyond the 5-year period. The FC approved the injection of funding, and the financial return will be used, and that remains the policy of the funds, and where circumstances warrant, some principle would be used in order to make sure that there will be funding to meet the cash flow situation of the funds. We are consulting members today, and we hope that we will seek a financial FC's approval to revise the operation of the financial arrangement. We are only delighted to take members' questions. All right, it's time for questions. 4 minutes for the Q&A. Vice Chair, Dr. Su Chang-wing, Dr. Wendy Hong, Mr. Tang Fei, Mr. Chen Chen-ying, and Ms. Carmen Khan. Dr. Su, Chairman, thank you. The Secretary has briefed us on the paper. Earlier, the FS, in his budget speech, also briefed us on the arrangement. I get the feeling that this arrangement is locking up $180 billion of public finances, and with $62 billion being returned to the government, and this is something that I'm sure will support. Now, the key thing is that since this arrangement is not reasonable in terms of the management of public finance, how are you going to deal with the existing fund? Will you be revamping these other funds as well? Other bureaus will be launching funds in different respective areas. Will the new arrangement be rolled out in a way that is more progressive? Secretary, the member has a point for these 42 funds. The budget may not have mentioned them, but members have already flagged them up before. We are responding to members' concerns. We hope that we are revisiting the financial management to see whether they should be enhanced. We will be identifying room to enhance the financial efficiency. I defer to the Permanent Secretary. Thank you very much, Dr. So, for the comments. We see eye to eye with Dr. So. We are more concerned about the capital seed fund because this is locking up quite a sizable proportion of government resources. But for the 42 funds, some of them are not operating as capital seed funds. They are set up under the relevant legislation. For instance, the Employee Training Fund. If labor has to be imported, there is a levy on the employer to be put into the fund for the training of the workers. So from our perspective, we are looking at the remaining 36 funds, and we are taking a holistic look to see whether there is any room to change the mode of operation, in particular the capital seed funds. Like Dr. So said, since we are concerned about the capital seed funds, at this point in time, the government will not be any more capital seed funds, as indicated in para 11. The Teacher Professional Development Fund that was proposed to be set up, the Education Bureau will now be using its own resources to support the development. As to whether the fund will be set up, it would depend on the result of the findings. But this arrangement will not in any way affect the devotion of resources in the teacher development.
Wendy Hong, please. Thank you, Chair. Now, the 6 seed capital funds after the next 5 years of necessary expenditure had been catered for, the rest, the balance, will be brought back into the government's accounts for the uncommitted balance. So for the government to allocate some of the uncommitted balance and funds for expenditure that is needed by the government is something that is can be understood by the public. My questions are, what is the policy objectives in setting up these 6 seed capital funds, and what is the effectiveness of their operation? Is it true that there are actually new solutions now, or replacement solutions now, or these seed capital funds have not been functioning well in the past years? If you have not done that analysis, just to say that they are of a certain size, then perhaps that would not be comprehensive. We have 42 funds with over $180 billion. Does it mean that other seed capital funds will be brought back to the government's accounts? So will there be a comprehensive review of all 42 funds, please? Well, we thank the questions, Chair, concerning this round of 6 seed capital funds bringing back to the government's accounts. This is about the government's finances. We have not looked at the efficacy or the policy objectives at setting up these 6 seed capital funds. For the future 5 years of earmarked expenditure, they are still kept within the seed capital funds for usage. So their modus operandi, their policy objectives will not be affected by this bringing back this time. In the future, will they continue to function as seed capital funds, or from time to time, because of certain expenditure, the government will make capital injection to these funds? Well, for this kind of possibility, in our comprehensive review, we will make recommendations and decisions. Hopefully, by the first quarter of next year, we'll be completing the comprehensive review. Now, Ms. Hong asked whether there will be continuous bringing back of the seed capital funds. The other 36 funds have been asked to be reviewed by the respective policy bureaus. If we see that there is room for a second round of bringing back, we may come to the LegCo again, to the panel, and then to the finance panel for approval of bringing back more seed capital funds if need be. Mr. Tang Fei, for the Research Endowment Fund for Hong Kong to be a important international hub, this is important. Research is important. Some 40 billion is to be brought back to government accounts from this Research Endowment Fund. Will this fund have sufficient money for future usage? For example, would it adversely affect the university's research or affect the ranking even of our universities because of the depletion from this Research Endowment Fund? Thank you, Chair. In 2021 to 2024, the expenditure was 1.2 to 1.8 billion. In the past financial year, it was 2.4 billion. So with 11 billion, it would be sufficient for future 5 years need. But on the other hand, we will not wait to the very last year, but in 2028, we'll be looking at the 6 funds to see their long-term operation, whether we need to make capital injection or other whether the other measures would be needed, and we'll come to the LegCo for that. But for this round of bringing back to the government accounts, the action will not adversely affect the policy objective or modus operandi of the funds. Thank you, Chair. 7 years ago, in my first term as LegCo member, I have already mentioned for there is too much flexibility for the bureau or the entity utilizing this fund, because the fund is put to the Hong Kong Exchange Fund under the Hong Kong MA for investments, and there seems to be less oversight over the funds once they have become these capital seed fund or seed capital funds. So I am in supportive of this direction. And even though the bringback is $61.5 billion, we do not want to see that there is a total bringback of all the other funds, but rather that it can be done in phases if need be. Now, in terms of the priority of the reviews, some of the funds are tens of billions size, some are just a few billion in terms of size, so they're different in terms of size. So for the seed capital funds, for those that are earmarked, for the expenditure earmarked, they can be retained, otherwise it can be brought back. Now, for some of the funds which are larger and there are questions about their policy objectives, perhaps these can come as a first phase rather than to wait for the 36 funds total review before you come to the LegCo. That's my suggestion. And also for the 6 funds, the Student Activity Support Fund is 88% brought back. Average is 80%. This fund is 88%. But this fund seems to be dedicated to the students in need from needier families, for example. So for the next 5 years, does it mean that every year the expenditure is about $60 million and this will not change significantly for the next 5 years? Is that so? And even for these funds, if they are retained for 1 or 2, 3 years, the transparency of these funds had always been problematic. We always just know about the balance and the expenditure, but the expenditure details are not transparent. Perhaps there can be more disclosure of the details of the operation of the fund so that the operation of these funds can be healthier too. Thank you, Mr. Chan, for the suggestions. We are of the same mind in the sense that the rest, the 36 funds review, from our Bureau's point of view, of course, for the funds where they have a sizable balance, those are prioritized. But on the other hand, if the funds, if they are set up by legislation, for example, where we have to change the purpose or the modus operandi or the management of the fund, we have to amend the legislation as well. So that is more complicated in terms of process. And we also notice that some of the funds have external donations. So we have to think about this too in bringing back the funds. For example, there are certain donors donating to the fund because they want to support something because of charity reasons. And if the funds are brought back, would it dampen the donors' will in the future to donate? As for the Student Support Fund, your understanding is true, Mr. Chan. For 23 to 24, it was 50 million to 60 million. In the last financial year, it was 65 million in terms of budget expenditure. So yes, the remaining fund will be amount in the fund would be sufficient for next 5 years' use for the Student Activity Support Fund. We have 4 still in the queue, 15 minutes extension. After that, we'll close the meeting. Carmen Can, please. Thank you, Chair. I agree with Mr. Chan, my colleague, in saying that these funds will have to be well used, and in raising the transparency, it is important. I have a request. since Mr. Hui is here, and they propose 6 capital seed funds, and in the appendix there is details about these 6 seed capital funds. And for these 42 funds, 23 are seed capital funds. Can you also use the Appendix 2 format to provide us with the details of these funds? Some are in custodian format, some are funds provided for by passage of resolution in the LegCo financial panel. In the future, we would want to supervise or monitor the operation of these 36 funds or the 42 funds. Can you provide the details as in Appendix 2? And also, there will have to be prioritization of the usage of the capital that you have brought back from the 6 seed capital funds. So are there some priorities? And because I do not see whether this is general expenditure or they will be dedicated to some specific items or projects after the money have been brought back. A third question I have is a 5-year expenditure. As Mr. Tang had mentioned just now, for 11 billion remaining in 2028 in your review, would that be part of the one of the areas of review? Would there be capital injection if it is insufficient? Perhaps it will be in the form of new injection. You will not be putting the funds back to the seed funds, I'm sure. And also, the paper is not very clear about the teacher qualification Teacher Professional Development Fund. The 2 billion, is it, what does it mean? Are you postponing the funding, the injection of 2 billion for the Teacher Professional Development Fund? Right. Thank you, Chair, for the further information to be provided. We will follow up with that to provide LegCo members for information. So after the 61.5 billion brought back, the funds will be used as general expenditure for the government. They are not specific to certain projects or items, but they will be general expenditure. So in the policy address, in the budget speech, the CE and the FS will be talking about projects which will merit further capital. So the funds brought back from the 6 seed capital funds will be dedicated to general expenditure of these projects. Now, as for the review in 2028, if we no longer use the model of the seed capital fund, then perhaps after a few years we can have new injections, perhaps as a mode of operation to meet mid to long-term needs of the funds. The Teacher Professional Development Fund, yes, Ms. Khan's understanding is correct. We will use existing resources to set up the said fund.
Dr. Tan Yueheng. Thank you, Chairman. I support the budget, and therefore I support the return of the fund. I'd like to find out more about this, though. This seed capital fund is kept there, is put with the Hong Kong MA for investment. It's not lying idle. This is in our balance sheet. And this arrangement proposed is an adjustment to the model. Instead of using the financial investment return, the government will be funding the expenditure. The exchange fund has been yielding pretty good returns. With these arrangements or adjustments, the exchange fund has been used before. Now the government is funding this in an alternative way. How can we assess the long-term benefits in assessing the adjustment? Are you with me? Thank you. Thank you very much for the question. Like you said, this arrangement represents a better use of the financial resources. Generally speaking, the government has reserves, and we have the financial resources. We would make investment with this because this will give us some better financial returns. And this new proposed arrangement is to deploy the resources that have been locked up historically. So we are moving this funding across to the government, and this will not in any way affect the work being undertaken. The financial situation is different to that in the past. And through this new arrangement, we will be still be underpinning the initiatives. But the fact remains that a lot of resources have been locked up. It would be a good idea for the resources to be deployed to allow us more flexibility. But this will not in any way affect all the initiatives that are proposed under the fund. Second, this will not in any way affect the financial stability. And before the 5-year cycle, we will be conducting a review to decide whether we should operate in the form of a fund. So this is a measure to optimize the use of financial resources. Dr. Tan, well, this is you said this is an optimization. You said this is locking up the fund. Why? Now, this is an investment. Why do you say that this is locking up the money? Well, if you do not use this money, the government will have to earmark the funding. But the fund was set up to allow returns to support the expenditure. Now we have more flexibility with the return of the money. If we can use the money elsewhere, there would be more flexibility. If there is a need on the part of the fund, we can deploy the resources to make sure that they are properly funded. So there is an element of the funds being released. Mr. Lee, Chairman, I support the budget, and therefore I am also in support of the arrangement regarding the 6 seed capital fund. When we have more resources, it will be easier for us to get these funds up and running, and we are yielding interest, we're yielding returns on the basis of these funds. And I think it makes sense for the government to move the money back to the general pool. I hope that the Secretary would consider this. Now, we are taking forward the development of the Northern Metropolis, and the external circumstances are still pretty tense. We were sitting on ample financial resources in old days, and I hope that things would be looking up. And if the securities market is doing well, we would be having more resources. Now, for the seed capital funds, they do serve particular purposes. We do agree that there is a need for them in the community. Education is playing a crucial role, and when we claw back the money, I don't think there should not be any cutback. Now, for the $25 million, there's a lot of negative comments. I hope you would consider various measures. In some departments, they do have the KPIs for raising revenue. The Financial Secretary, the FSTB, the CEDB, they are bringing in a lot of resources. Now, we are talking about cross-disciplinary cooperation. I'm sure that there are other bureaus that they can also raise revenue. In terms of cutting expenditure, if you go over the budget, you will have to make an explanation. And there is still this phenomenon of some bureaus, departments having to exhaust the allocated money. Now, we are tightening our belts right now, and I do hope that things will be looking up. And I hope that you will consider some other measures other than this proposed one. Secretary, well, the member has got a point. We are not really looking at this from a single perspective. In the budget, we're trying to cut expenditure, and we are raising revenue. And there are certain investment projects that are underpinned by debt issuance. And we will look at the financial needs to chart the way forward while maintaining financial stability. All these objectives remain unchanged. The member is right in saying that we should optimize our operation. We should do more of certain things and to make sure that we're not targeting at a couple of departments. Rather, we should formulate the right policy to allow more flexibility to the relevant departments. They should be having the liberty to deal with the finances. We are looking at this to identify ways and means to make sure that the money is spent judiciously and we get our money's worth. We will be communicating with the departments to make sure that they feel empowered in their day-to-day work. It's my turn last. Now, for these 6 seed capital funds, the money will be brought back to the government coffers. We understand the flexibility embedded there. Now, there are 42 such funds, and aggregate balance is $178 billion. Now, for these funds, to what extent are they invested in the equity market? Now, for these 6 seed capital funds, they are parked with the exchange fund, and they are securing returns to meet the future expenditure. According to the HKMA, there will not be any increase or reduction in the exchange fund. They are very experienced, and they are managing the investment in a very sophisticated way. But we are supporting the capital market. We're not suggesting that this should be boosted. But with so many different funds, we do have different considerations. And to a certain extent, they should be put into the capital market in Hong Kong to support our market here. Secretary, I've heard comments like this. I know that Mr. Lee is really concerned about this. You raise oral or written questions at LegCo. There are bureaus that have the funding pool that is being managed by the management financial management companies. We've been looking at the investment mandates to see whether they are hamstrung by certain elements in a way that they will not be able to participate in the local markets. If the fund pool participants do have the desire to achieve this, we hope that where possible, we should allow them the flexibility. We should empower them to do so. Well, let me supplement. I understand the direction of the exchange fund and also the role under the government. There are so many funds that the government can hold some influence. Can you make sure that there would be flexibility? The capital market in Hong Kong is being improved, and I think that there is every reason that they should be plowed into the local capital market, the equity market. All right, do you support this proposal being submitted to the Finance Committee for approval? All right, all in support? So much for the meeting, this part of the meeting. Thank you very much, administration, for being with us. Moving to item 7, any other business? Any AOB items? If not, meeting is now adjourned. Thank you all very much.